pretty much fell once again right within the market maker's expected move. It was about 8.5 priced in. We got about 7.5, so a little short. Bulls got burned there a bit on the 5600 and the 5605, but they were trying. They just couldn't get over that negative gamma at 95. Even at end of day, they failed to breach it. ES closing the day out at 5600. This is actually the like bull confirm. The charts fucked up, so the little green lines are gone. But the next test of the upside that's pretty important is up here at 5620. That's going to be the long-term trend. Breakout from there, and we're probably gunning for at least prior highs or maybe a new all-time high. Depends. We got 4 days till FOMC, so I think there's plenty of room to continue to push down on vol. And if bulls manage to get us above gamma neutral on the monthly, they'll have a lot more support from the in continuing to move the price up. Commodities moved up again today. The rally in oil continued after its lows. Gold, silver, copper up. Silver up a lot. Agricultural commodities moving up higher as well. This on the back of a falling dollar, while core PPI rose slightly. Headline PPI fell year over year by about 4 points, which seems to have, at least in the near term, negated the effect from the Eurozone's cuts, where they cut back to 3.65, so almost 100 points of cuts from where they were at. 65 points, 70 points of cuts. SRF killed it. Yeah, SRF's doing pretty good. I'm long uranium. The fuck are you on about? Yields at the top end of the curve moving up, with the yields at the short end falling a little bit as Fed fund futures trimmed rate expectations. Correlation continued to move down. Filling this gap in correlation here is probably where we see the strongest rally out of the index, provided we fill it. It is turning around and kind of finding some resistance here, so it's possible tomorrow won't be entirely bullish, but we may still get the high test, sell off, and then get some repositioning. Forward yield on volatility is now at -7. The yield curve's starting to re-invert again, and we're getting a little bit of leverage day over day on the short end of the JPY carry, but the long end's still staying pretty stable. It did pare back a little bit after our rally into close today, and yeah, they were lacking a little bit of the leverage they would have needed for the break at 5600. Rejections are still possible here. Move kind of flat on the drop in correlation. I don't think we're gonna see a lot of bond volatility right now. Yeah, probably not moving very much. Skew continued to drop, and this is kind of weird. We're still seeing a lot of tail risk hedging picking up. Day over day, it's kind of flattening out, but it's not. People aren't getting rid of those out of the money bought puts. They're still sitting in them. And, as skew gets closer to like 135, things are still pretty bearish. And I'd want to see this turn around to really get some confirmation that we're getting, like an actual bullish push up and not just a bear rally. Because out of the money put buyers on rising prices is generally not very bullish in the long term. 49.7% of the S&P above its 20-day moving average, and a little bit more correlation there with VIX. Vol's still staying pretty elevated, which makes me think that bond buyers, like bond portfolio managers, are still longing the vol, right? Probably expecting volatility to pick up if Powell cuts and the carry starts to collapse even more. Oracle 5% after hours already. Well, we'll see what it opens up. And Fed fund futures now pricing in just under 8 points of cuts. So starting to calm down after some recessionary data sparked fears. But still staying above 3 cuts in the next 3 months, which is just still quite a lot. And the bond market doesn't necessarily agree with that, right? Like the 3-month yield is at like 4.986, so they're saying like maybe a little more than 2, but probably not. And Fed Fund futures is at 3, slightly more than 3. So there's a little bit of divergence in the speculation there. We did break above the 20 MA today, and we're now above the 50 and 30 EMA on the S&P. We found support along that trend there. Got a double bottom off of 5400. This should set us up pretty nicely for a move out to like 5730, but we don't have a lot of time before the FOMC to hit that, so we'll need to move quick. Otherwise we could end up in a situation like we were back in back in August, where we didn't quite get the all-time high before the bad data started rolling in again. Triple top SPX on the daily. Could be. I mean, there's definitely a trend to consider there, right? Like this is not necessarily. It still kind of looks like shit. We have a like an inverse head and shoulders, right? But I'm not really sure I like it very much. We'll see how it plays out. Might just be a really over the top diamond top. We get the retest at the all time high and then just dump. Did ADBE miss or what? Maybe down about 7% on the after hours. It doesn't look great. I'm going to say they didn't hit their guidance, or they're pulling their guidance back. I don't know what the their earnings actually look like. They were expected to report 5.37, up from 4.89, with 4.53 a share. And all of that was expected to come from their AI suite. So, yeah, it's very possible they missed that. I don't know. You could go look it up. Get some rest. Yeah, I'll try to. All right, guys. Thank you so much. I hope everybody made a bunch of money on that drop today. That was super fun. I'll see you guys tomorrow. Have a good one.